This is the Ozone Radio Show, where we bring you facts, not fiction, by focusing on timely information you can share with confidence, because we value realism, not sensationalism or shock value. So join us now for ideas and information you can use right away.
Hi, everyone. I'm Bill Storie, and I welcome you to the Olderhood podcast. And my guest today is Nick Rilley, who is a Senior Investment Manager and Strategy Analyst at Butterfield. Hi, Nick.
Hello, Bill.
Today, we're going to do a review of the first quarter 2022. Nick, I think it's certainly been a very eventful quarter. I think there's all sorts of things, obviously, that have been going on. And obviously, there are some serious challenges to, I suppose you would say, global peace and financial security. Obviously, the Ukraine war has attracted everyone's attention, both in terms of human tragedy, but also financial markets. And also the increase in inflation, especially in the US, is also a major concern, and the ripple effect of that, worldwide. Now, there are many other, things going on in the world, but I think those two perhaps have, top of the bill. So, Nick, how do you see that, both of these situations impact overall confidence by investors, and how does the Ukraine situation impact inflation?
Yeah, I think that's the right way to characterize it. Inflation and the Russia-Ukraine situation are two of the most important themes going on in the world right now. And if you go back to the beginning of this year, so before Russia-Ukraine really came on investors' radars, inflation was the biggest challenge that was facing the world, which was happening alongside the recovery from the pandemic. So the pandemic's caused this huge shock to the global economy, and it's meant that there are a lot of supply and demand, imbalances between, what the economy can produce and what's being demanded by the economy due to the pandemic. So when we had lockdowns, when we had the pandemic before the vaccine became available, there was a huge demand for durable goods. So people staying at home instead of traveling. At the beginning of the year, the hope was that this year would be the year of normalization. So people going back to normal, inflation coming back down towards central bank targets. But it looked like that the central banks were going to have to react and put up interest rates to stop this inflation getting out of control. So the issue was it became a lot broader. So it started to spread to things like services. So that was where we were at the beginning of the year. Central banks reacting to this inflation that was with us for longer than people thought. And then the Russia-Ukraine situation, obviously it's been a terrible tragedy, what's been going on there. But from purely a financial market and economic perspective, the situation was really one of concern around what the impact was going to be on commodity prices. So Russia and Ukraine together are relatively small in terms of the global economy. They're something like 2% of GDP. So that's not huge. But when you look at actual commodity production and commodity exports, Russia exports a lot of oil and natural gas, also a lot of agricultural goods, things like products that go into fertilizer. And then Ukraine as well exports a lot of agricultural goods such as wheat. So when you put all that together, it was quite a risky picture in terms of how this war was going to spill over into the global commodity picture. And commodity prices, as we know, have a habit of feeding into other prices. So it really compounded these existing inflationary impacts that we had. So when we talk about confidence, that's had a pretty negative impact on confidence. So if you look at, measures of consumer confidence in the US, so there are people that go out and do surveys and ask consumers, how they're feeling. And some of these measures, they're right back down to where they were in the global financial crisis, which is incredible, really, given that the economy is in a much better position than we were back in 2008-9. But the real issue has been inflation. So people are seeing prices of gas, petrol go up. They're seeing prices go up in the supermarkets, and wages are going up, but they're not quite going up as fast as inflation. So it's had a pretty bad impact on consumer confidence. So that impacts spending. And once it impacts spending, that impacts investors as well, because that has an impact on corporate profitability.
We'll talk about fixed income and global equity markets in a minute or two, but I'll pick up on one of the words that you were referring to there, namely the pandemic. Now, obviously, no one in the world is ever going to forget it. Some would even argue that we still have it, although I think it's fair to say that it's much reduced, but perhaps not been eliminated. So I guess my question then is that we know that world events, and I use that word, those words very loosely, but world events do impact financial markets, as you correctly said. But I'm wondering, is there a time lag in between like a world event and impact on financial markets? And I think the answer is probably yes, but I'll let you tell me. But if that's true, then are we still experiencing financial economic impact from the pandemic without necessarily moving into the Russia-Ukraine situation, or even for that matter, the inflation issue? But just, are we still feeling the blowback or the feedback, whatever, the ripple effect, as I said a few minutes ago, from the pandemic?
I think we are certainly, yeah. And it's very difficult, as you say, to kind of untangle what the lags are in terms of these impacts. So if you think of a company that, manufactures goods, they probably have inventory. So they are able to withstand a certain amount of, increased demand or a demand shock based on the inventories that they keep. But as those inventories get drawn down, which we saw in something like semiconductors in the pandemic, it takes time for then the effects of that to ripple through the supply chain. So you might have some businesses that are worried about low inventories, so they over order. And then that has a knock-on impact for producers who get big orders that they can't fulfill. And it's really hard to figure out how long these impacts are going to last in the supply chain. And you see it with things like logistics as well. Less flights coming from China to the US means there's less air freight capacity, for example. So something like that is quite slow to come back. But just before Russia, Ukraine, there were some promising signs that these supply chain issues were starting to resolve themselves. So people, not buying, as much, durable goods and like autos, for example. So the prices of autos have gone up so much that the surveys say, or people respond to surveys and say, now is a very bad time to buy a car. And that's kind of not surprising because the price has gone up so much. We're getting through the pandemic, so people are more comfortable going back on public transport. So the market, the system was in the process of kind of recalibrating and rebalancing itself. And I think that's where a lot of the optimism around inflation was coming from, that these supply chain issues were in the process of normalizing. So there was kind of, a real sense of optimism, but Russia, Ukraine, and also COVID issues in China have really challenged that thesis. So large parts of China are actually locked down again due to COVID restrictions. So the worry now is the supply chains that were in the process of kind of resolving themselves have had additional setbacks in the last few months, which is not what the world needed.
So without going into too deep of an economic cycle discussion, but, when we talk about supply chain, this may sound like an obvious sort of question, but I would be interested in your thoughts regarding the difference between, let's call them perishable goods, which let's loosely call food, versus tools and equipment or, lawnmowers or whatever it may be, sort of thing. In the case of things like lawnmowers, there's obviously a time lag to get new stuff coming into the supply chain. But, the food issue, because it's got a perishable factor associated with it, does that change we talk about the supply chain, but does the supply chain actually apply to every aspect of life?
Pretty much, yes. There's a huge spectrum of people, growing their own fruits and vegetables in allotments. So that's the kind of shortest you can have as a supply chain. But when you think about what's happened in the global economy over the last 20, 30 years, these global supply chains have become very, very specialized. And a lot of businesses work on a just-in-time production. These supply chains have been so good, they've been so resilient, and they've worked so well for a number of decades that businesses and consumers have come to rely on supply chains working. So you order something, it can be delivered in whatever the time frame is that you would expect, but it's generally short on the basis that these supply chains are so well calibrated. The flip side of having these very complex, well calibrated supply chains is that when you get a disruption in one part of the supply chain, that can have serious knock-on implications down the line. And we've not really seen a shock like the pandemic in our lifetimes. So there are all these different businesses. And as you say, it depends what you are producing and what that supply chain looks like. So in China, at the moment, for example, they have issues with the food supply chain because of the lockdowns, which is quite different to, say, the UK back in 2020, that, you know, designated key industries as being allowed to continue to operate. But there were still huge shifts. So restaurants were shut, but people were ordering far more food to consume at home. So the supply chain had to calibrate to allow these shifts in demand to be met. And it's been a real challenge. And as you say, it depends on what the product is. And companies have been very smart at managing their supply chains. And it's been a huge shock, but generally they've done a very good job. Things could have been really bad in the pandemic, but generally speaking, after those initial issues, the system has been very resilient, I would say, given the nature of the shock that we've had.
Anyway, listen, I know we could talk for ages about some of these things, but we're frankly now running out of time, Mr. Rilley. So my sincere thanks, Nick. So my guest today has been Nick Rilley, Senior Investment Manager and Strategy Analyst at Butterfield. And this is Bill Storie signing off on the Olderhood podcast, and we'll catch you again next time. Take care, everyone. Bye.